Hey, it's Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty. You may have heard about our premium flat fee listings, maybe through a postcard in your mailbox recently. We'll talk more about those in just a second, but first we're going to take a look at the real estate market news here in Cincinnati for February of 2023 and compare it to February of 2022. First of all, new listings are down 16%, closings are down 33%, average sale price is up 4%, average days on market is up 40%, total inventory is at 68 days, and active inventory is at 28 days. So it is a seller's market, but not as strong as it was a few months ago, and certainly not as strong as it was last year. So you do need a more sophisticated marketing approach if you're thinking about selling your home in order to sell quickly and sell for top dollar, but you don't have to pay a 6% commission to get that. It actually comes standard with our premium flat fee listings. We actually help our clients save several thousands of dollars in most cases compared to the cost of hiring a traditional agent who charges a 6% commission. But we offer full service, we offer luxury marketing. We treat all of our listings with the same amount of care, whether they're worth $100,000 or $1 million. Every one of our listings is marketed as a luxury listing in order to help our clients sell quickly and sell for top dollar. But because of our business model, we don't have to sacrifice the quality of our service in order to save our clients money. We save quite a bit of money by not having brick and mortar offices like other traditional brokerages do, and we share our savings with our clients. So the result is literally a better service for a better price. I know it may sound too good to be true, but if you want to learn more about it, if you're curious, visit our site at 513flatfee.com. Take a look at what we offer and take a look at what some of our clients have said. You can even look at our marketing portfolio so you can see the professional photography and videography that we use to market our clients' listings. And perhaps most importantly for you, you can take a look at our savings calculator towards the top of the page there, again at 513flatfee.com. to see how much you could save if you hired us rather than hiring a traditional agent to help you sell your home. I'm going to break down each of those statistics in just a second, but I wanted to touch on the perspective of a buyer right now. So if you are thinking about buying a home right now, I'm sure you already are aware that interest rates are nearing 7%. That's almost double or more than double, depending on what rate you were able to get last year. As a buyer, if you have been looking for the last couple of years and you're still looking, your perspective has shifted. The homes have increased in price 18, 19, 20% the last couple of years, plus interest rates have doubled or more. So your affordability has really gone downhill. It's more difficult for buyers to buy what they really want and what they have been expected to be able to buy in the last couple of years. So your expectations have shifted. Maybe you've gotten frustrated, maybe you've got out of the market because you don't really believe that it's a good value right now. Certainly all of those feelings and all of those thoughts are relevant as long as they're based on historical data and based on experience and things like that. But if you do have strong motivation, whether you're renting right now or you're thinking about moving from your current home to another home, if you have strong motivation or strong need to make a move, to buy, to sell, to do both, I don't recommend trying to time the market, because as you can see here, 6 months ago, roughly before interest rates went up, everything was going crazy. The seller's market was on fire. It was difficult to buy, certainly, but interest rates were low enough that a lot of buyers thought that you could still get a decent value. Sure, you had to feel like you were overpaying to get the home under contract in a multiple offer situation, but at least interest rates were low enough that the monthly payment was affordable. So things have shifted certainly in the last 6 months. I don't recommend timing the market because, as you can see, things have shifted pretty drastically in that short period of time. We don't know what the future holds. We do think that interest rates may go down here in the next year, maybe a little bit to 5.5%, 6%. We don't know if that's going to happen or not. We also predict that home values are going to continue to go up around 4 or 5% per year. So if you're going to delay your potential purchase a year or two, you may be looking at 5 to 10% higher prices, and you may not have a difference enough in the interest rates to make up for that additional expense. So I don't want to be the bearer of bad news here. I think it's pretty evident what's going on from a buyer's perspective, but we don't know what the future holds. So again, I don't recommend timing the market. If you are deciding on whether or not to make a move based on the market conditions, I think you're taking a big risk, because we just don't know what the future holds. If you feel strongly that you want to be a homeowner versus wanting to be a renter, or you feel strongly that you need a larger home, or you feel strongly that you need a smaller home, or you want to relocate, all of those things are motivating factors that I think are much more important than what's the interest rate today. Because as you may have thought, yes, and you may have heard from loan officers as well and real estate agents all over, that you can, and it's kind of a cheesy phrase, marry the house and date the rate. I don't really like that phrase because it kind of oversimplifies the situation, but it does get your attention that yes, a long-term strategy is to be a homeowner, and the interest rate you have right now is something that's temporary. You can actually refinance in the future to a lower rate. Sure, in most cases you're going to have to pay something for that refinancing, but it's going to lower your payment and it's going to make things more affordable for you from a perspective of a monthly budget. So enough about the buyers and sellers and what they should be doing right now. I wanted to break down a little bit for those that are still watching. I'm assuming you're interested more in the data. Maybe you're really motivated to buy or sell, make a move here. I wanted to dig into this data a little bit more than I normally do. You may have seen my YouTube shorts or on other social media platforms, just a minute summary. It's basically 30 seconds of data and 30 seconds of a commercial about my premium flat fee listings. But if you've made it this far and you're interested in kind of digging a little bit deeper, I wanted to go through some of these data points and what they really represent. So new listings we mentioned are down 16%. That's for February of 2023 compared to February of 2022. That's what all of this data is in this video. So we're comparing all of February this year to all of February last year. I think that's the best way to do the data, not to look month to month, but look at the previous year, because our business is very seasonal. If we were to look at February compared to January, we're going to see that the market is getting hotter as we approach spring, and certainly in the summer it's hotter, and then in the fall and winter kind of tapers off. So there's always fewer transactions happening at those times in the fall and the winter because of the weather. Some of the warmer weather areas like Florida are actually opposite of that for the same reason, because of the weather. But in terms of new listings, it's kind of self-explanatory. This is inventory that's coming to market. So homes that are for sale that went up for sale during February of this year or last year. That's the data we're using in this one. It's down 16% compared to last year, which means there's less inventory coming to market, less to choose from, a fresh inventory for buyers this time, this February compared to the same time last year. Closings are also pretty easily understood. Those are the ones that have closed, the transactions that have actually gone all the way from active to pending, and they've all sat down at the closing table, they've settled everything, money exchanged hands, and the buyers get the keys and they get to move into their new place and the sellers move out, right? So closings being down 33% is not really a concern so much for the consumer, whether you're buying or selling. It's more of a concern for me as a professional in the industry, for other agents, for the title companies, lenders, home inspectors, those that rely on for their livelihood, their careers, their business. They rely upon people moving, buying and selling houses, right? That's what our business is. I help people to do that. When there's fewer people doing that, which this is representative of, with closings being down 33%, that means there's a third less opportunity than there was the same time last year. So as a consumer, it shouldn't bother you. It shouldn't really even be a blip on your radar. It's interesting to know. But it's more of a concern for professionals that if I want to keep my business at the same level this year compared to last year, or if I want to grow from there, I have to have a bigger piece of the pie. I have to have a larger market share, because the pie, which is the opportunity, the number of closings in the market, is actually shrinking compared to last year. We'll move on to sale price. Those are direct reflection of home values. A lot of people want to know what their home is worth. Average sale price is going to tell you that. We're up 4%. Compared to last year, according to the stats, again, from homes that have sold in this February compared to last February. It's not a huge increase, but it is more normal than what we've seen in the past couple years, where we've seen 18 to 20% price growth. Now we're more at the 4 or 5% range, which is more normal. We would like to see that number outpace inflation. Obviously, with inflation being much higher than it normally is recently, that's more difficult to do. But we do expect that as that goes down, hopefully in the future, we get the interest rates down a little bit as well, which, if you're following the financial news, part of the reason the interest rates are going up is to try to tamper down inflation. So assuming that we get inflation under control, we can lower interest rates again, more demand comes to market, there's more transactions happening. So if buyer demand goes up in response to lower interest rates, which it should, and if inventory stays relatively the same, we're going to see the rate at which home prices increase is going to increase more quickly. So we're going to see rises more than 4%, maybe closer to 10% at that point. And with inflation being lower, hopefully by that point, we're going to see that home values are going to outpace inflation, which is really what you want in any long-term investment. I don't recommend buying a house as if that is the same as and some sort of ETF or 401k or any other type of investment. If it's an investment property, that's different. But I don't look at the home that you live in as purely a financial investment. You have to live somewhere anyway, so it's better than renting long-term in most cases, but it's not necessarily purely a financial investment. Average days on market is the time that it takes to go from active status to pending status. In other words, the time that you're showing your home, you're accepting offers, to the time that you take an offer and you go under contract with a buyer. So that right now is up 40% compared to last year. We're at 28 days, which is more normal from what we've been seeing in the past several years. The last couple years, it's been a lot faster to sell your home to get under contract. It's been in sometimes single digits, like 5-6 days on average. Last year at this time, it was 20 days. So it tends to be a longer time during the fall and winter when there's fewer buyers looking. It tends to be faster in the spring and the summer where there are more buyers looking, again, because of the weather. Total inventory at 68 days, like we mentioned, is pretty much in line with where we have been the last few weeks. It has been as low as 60 days earlier this year, which is normal to have less inventory in the winter than as we're approaching spring. We do expect that number to increase potentially here. We're going to have more new listings coming to market than we are having right now, just because we're going to be getting into the warmer months, but we're also anticipating in response to that, we're going to have more buyers looking. So total inventory is actually a combination of active listings, coming soon listings, which are those that are going to be active in the next 10 days or less, and then also pending listings, which are those that are already under contract. In most cases, buyers cannot bid on those, cannot look at those pending listings because they're already under contract. They're already committed to a buyer. So pending listings are not really an opportunity for buyers so much. Yes, in some cases you're allowed as a buyer to look at that property and submit a backup offer, but you can't buy it out from underneath the person who's already under contract. That contract has to terminate in order for you to actually be the primary contract on it. So we look at total inventory and active inventory differently. Active inventory is at 28 days, which has pretty much been the same number. We've seen 28, 29 for this whole year. I think that's more indicative of what's going on in the market for buyers and sellers to focus on. That is just the active listings and also the coming soon listings. So again, coming soon listings are those that are going to be active in 10 days or less. You cannot bid on them, you can't see them yet, but you're on notice they're going to be active on this date and time. So then you can see those listings, you can bid on them as well. So 28 days worth of inventory just means that if there was no new listings coming to market and if demand stayed the same from buyers, then it would take 28 days for there to be literally nothing for sale. So that may be kind of alarming to think that there's less of a month's worth of inventory. However, this has been going on for years now. The last few years, we've had about 30 days of active inventory, roughly. It's sometimes been as low as maybe 20 days or less. But we have to have new listings coming to market constantly in order to replenish what has been sold. So that tends to happen. We've never seen a situation where there's literally no listings coming to market, so we don't anticipate there to be no houses for sale in the next 28 days, but that's just how this number is calculated. So I know that's a lot to digest. Hopefully that makes some sense for you. If you have any questions about the data, about those different categories, why they're important, how they're relevant to you, whether you're buying or selling or doing both, or if you have any questions about advice as a buyer or a seller, or the logistics of what it's like to go through the whole process of buying and selling at the same time, feel free to reach out to me. You can check out our website at 513flatfee.com for more information, again, on our premium flat fee listings. You can check out client testimonials, check out the marketing portfolio, but you can also click on a link there to schedule a call. That'll cross-reference through Calendly with my calendar. That way we have about 15 minutes set aside that we can have an intelligent conversation and trade off back and forth about what you're looking to do, see if I can help you to do that. And that way, through that conversation, we can get a comfort level on whether or not it makes sense for us to work together to help you to achieve your real estate goals. So thanks for watching. Again, I'm Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty.